always so surprised by the date. I think it just feels like it was just January yesterday. It's crazy to me. Anyway, let's go ahead and get to it. We're going to do our normal thing like we do every single day. We're going to run through what's happening in the futures market. We'll talk about Forex. We'll hit crypto, and then be on our way. I don't really have anything specific this week to talk about. Over the last couple of weeks, we've hit how to trade breakouts. We've talked about how to trade bounces, and we've talked about a trading method that's kind of a combination of the two. The bounce, which is the retracement in the direction of a trend, and then playing breakouts that are in. Well, I'm sorry. If you've got the combination method would be if you've got a trend, let's say that's up. It's a combination of using the bounce and the breakout. So if you're in an upward trend, we'd be waiting for pullbacks, and then on a smaller time frame, trading breakouts that are in the direction of that trend. So that's the combo methods. We've talked about those over the last few days. We've been talking about this stuff really since about this time last year. And you can go back through Facebook. I've been doing the lives just about daily for the past year, trying to keep you abreast of the fact that super simple trading strategies can and do work. And they can and do work because they're simple. And the less moving parts you've got to worry about and deal with, the more apt you are to stick to that plan. And when you stick to a plan that has a positive expectancy over the long term, meaning that you're going to, have a reward that's 2 or 3 to 1 times your risk, at least 1.5 times your risk, but a reward that's greater than your risk, over the long term, you're going to have a positive expectancy. When you do all those things, that's what makes you successful in trading. It's when you deviate from those things that you blow out accounts, you use too much risk, so on and so forth. And I think all of us can speak from experience. If you're honest with yourselves and you look back about what happened when you blow out accounts or have big losses, it's typically because you deviated from a plan, or you never had a plan to begin with that you actually stuck to. So that's the purpose of what we're doing here. We're just trying to teach you. You don't have to have crazy numbers of indicators. You don't have to have all these fancy tools that tell you all of this copious amounts of data about the market. You just need a simple trading strategy that works and gives you that positive expectancy. So that's what we've been working to do. There are tools on the website. If you don't have access, you can purchase the tools online. It's only $2.97 for all the different tools that we utilize here. They work in MT4 and MT5. I am working to have them coded for TradeStation as well. Haven't finished that just yet. Had a couple other projects that actually popped up here recently. And I am looking to automate some things. I talked before about that a little bit. I'm becoming more and more a believer in automation. I just haven't found the right thing that really gets it right. Automated trading, in my past experience, and this is one of the hang-ups on it, fails over time. And I'm not really sure why, but they all seem to fail very miserably when they do. There's a few things I have been looking at. There's some quants that I've been talking to that have pretty cool strategies that are based in logic as opposed to chart patterns and things that are debatable in some realms. I mean, currencies are very different from trading futures or trading the stock market. Currencies are utilitarian, and they thereby move differently than the futures market does, because it's futures market, stock market, those are for the most part totally speculative. So anyway, I'm going down a rabbit hole I don't need to go down. Let's knock this out. I want to get through the charts for you, talk about what the biases are, and then get you on your way, because I actually have another call coming up at 7:45 my time. So that just gives me a few minutes to get you through this stuff and get you out of here. The big takeaway from all of this is I really want you to have a trading plan. Just, most people around the world have downtime right now. You've got time to learn something. Don't sit there scouring the internet for the next great thing that's going to make you a millionaire in the next 2 weeks, because nothing will, despite all the claims. Don't scour the internet looking for all of these, quote, trading systems that give you 100% winners or 80% winners, because most of them don't. Unless they're taking very small wins, at which point the wins don't outweigh the losses. Just develop a trading method that's based in real math, and then stick to it. So anyway, let's go over here and get to it. What's happening over in the futures market? I'm going to run through this real quickly. Biases have changed. Remember, last week we were still on a downward bias for the S&P. We were in a downward bias for crude. Gold has been kind of mixed. We have been in an upward bias on gold for a bit now, but the S&P for sure is starting to flip over on us here. So the 4-hour bias is really, depending on how this closes, may flip to the long side. Seems kind of strange to me that we'd see the stock market improving given all that's going on, but we can't trade what we think should happen or what we hope should happen. In order to be consistent, we have to trade what's on the chart. So it'll depend on how this 4-hour closes. If we get the close where my short term breaks above my longer term here, then that would be a confirmation that the bias is changed on the 4-hour, at which point the 4-hour and the 30-minute would be in agreement for a long bias. Right now the 30-minute bias is long, and so with that said, what we would be looking at would be looking for areas of opportunity where if price floats down, we could look to buy off of that and buy in the direction of that trend. Now that's still a big if. We have to have the 4-hour close where the bias actually changes. If the 4-hour and 30-minute are in the same direction, and that's how you trade, then you'd be looking for long opportunities there. The confirmation of bias, there's a lot of different ways to look at it. You don't have to trade based on that, saying the 4-hour, if the 4 hours different from the 30 and so on and so forth. I mean, do with that what you will. I'm just giving you the data out there. You can create your trading plan around that however you like. Some people, though, when they look at a 4-hour bias and it's different from a 30-minute bias, if the biases are not in agreement, they may choose not to trade. They may only want to trade when they've got agreement with those, because it, in theory, has just more filters for their trading entry and their trading process. That's all that indicators are. It's filters. It's filtering down the market data and then giving you an opportunity to take action on that, right? So do with that what you will. But the 4-hour bias, we'll see how it closes. If that closes where my short-term moving average is above my longer-term moving average, that would indicate that the 4-hour bias has turned long, and it would be in agreement with the 30-minute. But right now the 30-minute bias is up, and depending on how you play that, you'd be looking for potential buying opportunities. That might be a pullback in a buy, or setting up a breakout above where things have been for the high today and looking to buy through that. There's a lot of different ways to approach the market. You've got to find the one that's best for you and that helps you manage your risk the best way. Crude, we flipped over here. We had hit that low of 20. We talked about 20 for a few days last week. Really cracked through that on Thursday. There was some natural gas news and things news. Crude took a pretty nice push here. We'll see what it does from here. It certainly has hit some key areas, but the bias on the 4-hour and on the 30-minute are both long. Over here on gold, so for crude, we're kind of in the middle here again, 2,700 to 2,900 being key areas. If you're looking to trade long on this, which would be the direction of the bias, you'd look to either buy off of a pullback or set an area over here, let's say 28, and as it breaks through the top of that level, then you could potentially be buying the breakout of that top level there. Crude, again, logically, looking at kind of where the other markets are, it doesn't seem like we'd be continuing to gain, given the fact that we've got months more, I'd say months, weeks, at least weeks more of lockdown, and there's a lot coming. Friday's payroll numbers were just the start of I think job losses. So interesting to see where these will go over the long term, but right now the biases are up on both of those. Over here on gold, We're looking bias is still long. 1700 has played a big point of resistance for us here. The market's hit its head on 1700 and reversed a number of times off of that. But 4-hour bias is up, 30-minute bias is up. So what do we do with that? Well, we'd be looking for key areas to potentially buy off of. So if price floats back, if it pulls back to the some other key areas here, we could look to look for buying opportunities. So whether it's buying off of a pullback or setting a whatever the high is and waiting for it to break through a key level, that might be a way to approach that over on gold. So a lot of different ways you can approach it. You've got to find the approach that's best for you. I encourage you to go back through the videos that we've done before, training on specific trading types. All it really comes down to is finding a mathematical advantage over the market, giving yourself some filters that give you a little better than just a coin flip, right? Find yourself some filters that can filter out the market that give you an edge, and then trade that edge. Again, there's a lot of videos all through the past. If you go back through Facebook or YouTube, the live sessions I've done, there's tons of different ways that you can trade the market. You've just got to find the one that works best for you and implement it consistently. The consistency is the key there. Give yourself an edge, give yourself a mathematical advantage, exploit it over and over and over, rinse, repeat, rinse, repeat, rinse, repeat. That's all it really comes down to. So that is it for those markets. Let's see what's happening over in the foreign exchange side of things over here in Forex. We're seeing some movement here. Couple of currencies that are strong currencies coming into the U.S. session, which has been going. The foreign exchange session has been going for about 30 minutes now. Regular trading hours for futures for stock market, we've got about another hour before that gets rolling. Yen is definitely a strong currency coming as the U.S. session's been getting going here. Yen pushing to strength. The pound has actually been flat for so far, but it is starting to pull down below the midpoint. So we've got some divergence between the pound and the yen. Definitely seeing some move there. It's probably a little far off of this right now. Looking at the breakout, it really pushed through there pretty significantly as the session first got started. So as far as being able to place a breakout trade on the pound versus the yen at this moment, I don't really see it being a viable opportunity, given the fact that it's already pushed through and pushed past what my breakout was, as the market session began a half hour ago. So don't really see much there. Looking at other opportunities, you've got the New Zealand and the Aussie that are both stronger currencies here. As far as what to pair them against, we could look at the CAD. The CAD is certainly a weak currency comparatively to the others. So we've got the CAD that's moving to weakness. You've got the Euro as well that's moving to weakness. So looking at something here with the Aussie versus the Canadian, Euro versus the Aussie, there's some potential opportunity there, I think. We've also got USD that's been below the midpoint as well versus the CAD. So just looking through those over here, let's see what that is. Euro versus the odd, we've moved 95 pips on an average of about anywhere from 120 to 160. So is there 20 pips left of potential opportunity? Yeah, definitely on that one. Let's see where we are on the others. CAD, the Aussie versus the CAD. Oop, that's not what I wanted to do. The Aussie versus the CAD on a chart window. If we look at the Aussie versus the CAD, trend is up. Current day range about 76, averages anywhere from 140 to 180 on that Aussie versus the CAD. Looking for Aussie to go long. We could certainly put a trade on for that. What I did is I just simply clicked the box here. What it's doing is it's putting a trade at the top of this. It's putting a buy order at the top of this box and a sell order or a stop loss at the bottom, and then a take profit. Equal number of pips higher up here. So if this is 20, this is 20 pip take profit, and then it's going to ratchet off risk every pip that it moves in my favor. The thought here being, given the divergence between the Aussie and the Canadian, do we have enough room for it to move 20 pips? I think, based on the fact that it's moved 70 and we've got, typical range of anywhere from 140 to 180, could it continue to move? Yeah, it certainly could. Bias, is up. We're seeing that we've got, if we look at the volume detail, we've got buying, we've got orders here that indicate that we're buying with this market. So looks good. It's trading with the trend. We've got opportunity for that continued movement. We're coming into the more active session for the Canadian here in just a bit. So if the Canadian continues to weaken, it'll fill us. So here's the deal. If it doesn't move up and take us into this trade and continue to push on to ratchet off risk, no harm, no foul. It's a stop order up here. It's only going to be filled if the price moves up in our direction. So, coming back to that breakout that we've talked about before, it gives us that opportunity to trade in the direction of a trend. It gives us the opportunity to be in a trade as price is moving with that direction. So it's a confirmation of what's happening there. It just makes it, I think, a breakout style trading is easier from a mindset perspective, just simply because you're not having to do anything that's contrary to what the market is currently doing. So anyway, if it breaks through there, continues on, breaks through it, fills it. If it doesn't move up and break through that, then we just don't do anything with it. We close it out and we move on. Again, you don't have to be in a trade at all times, right? So anyway, there's that. We'll move this over, let that do what it's going to do. So that's one way of looking at the Forex market. The Forex market's utilitarian. It does move differently from the others. So you don't see me using support or resistance on the charts over here. I'm just simply looking at currency strength, which gives me an opportunity to identify which currencies are actually moving. How are currencies moving? If they are, which ones are moving? And then we pair those together to give us that best opportunity to have something occur. Does it mean it's going to continue to do that? No, absolutely not. No indicator in any market ever guarantees you that something is going to continue to happen. It's telling you what has happened, and you're making decisions based on that of what you feel like may happen in the future based on what's happened in the past. There is no guarantee of the future. None. In any system, in any method, anywhere, no matter what ad you read online or what came into your mailbox or what Facebook post that looks like a post but is really an ad is telling you, nothing guarantees the future. When you push the button, when you click buy or sell in any market, the stock market, the futures market, the cryptocurrency market, the currency market, when you click buy or sell, from that point forward, you have no control of what's going to happen. What's happened in the past has happened in the past, and it's led you up to making decisions to that point. But nothing can guarantee you what's going to happen next. Nothing can. There's different things you can do, which we've talked about. Well, I'm going to get on my freaking soapbox again, because these things drive me crazy. Because it sounds like they're making guarantees about what'll happen when you utilize these systems. Not saying that the systems are bad or aren't good. I think they're all good. I know so many of these folks that posted things out there and sell the things. They're good, but you've got to apply them the right way, and they've all got pros and cons. They've all got pros and cons. In order to get a higher win rate, you typically have to be more aggressive with peeling off risk. So you have a higher win rate, but you don't have maybe a time when your actual amount won is significantly larger than your amount risked or amount lost. So, which is okay if you consistently have that really high win rate. You can get away with having a lower amount of win percentage than not win percentage, but a lower amount of money won than money risked or money lost. You can get away with that if you have a high win rate, and it's consistently a high win rate. So anyway, there's trade-offs, right? So typically, when you have a high win rate, you're taking off risk maybe more rapidly, so you're taking smaller wins, which don't really outweigh your losses, but because of the high win rate, they do, right? That's okay as long as you understand what to expect from that. A lot of people abandon those trading processes because they have those couple of small wins, and they take a larger loss and they flip out because their brain can't process it. Maybe they have a couple of those larger losses in a row, and then they abandon that process because they see that they're losing more than they're winning. But if they stick with it and their win rate's high, it works out in the long term. That's okay. You just have to understand that that's what's happening going into it. Anyway, I'm going down a whole path I probably don't need to go on. Just realize everything in trading has a pro and a con. There is no perfect process. There is no perfect system. It's what is best for you. For you. Where's my camera on this thing? It's what's best for you. It's got to be something that you are able to consistently apply to the market. You have to understand the trade-offs, the risks and rewards behind it. You have to understand how it works and look at it mathematically, how it works mathematically, because that's irrefutable. The math is irrefutable. Okay? The math, it's the math. I don't care what anybody tells you or what story they have behind it. The math is the math, right? So anyway, there's my bit on that. Man, I'm running out of time. Crypto, we're flipping over bias. We had a little bit of a run over the last couple of days. Crypto bias had been a short bias over on the 4 hours for both Bitcoin and Ethereum. The bias is flipped to where we're looking to see that we may have a long bias again now. So we'd be looking to potentially buy on pullbacks from there, or set your breakouts and look to buy there on those breakout opportunities. So anyway, I've run myself out of time. I've got to go. I have another call coming up here in just a few minutes. I've got to jump on. So I'm going to go do that, and I will talk to you guys next time. If you have any questions, please let me know. Happy to interact and chat with you. You can talk to me through Facebook, or you can just email, over to support@makemoneyfromyourlaptop.com. All right, that's it. Talk to you later. Bye.